If you've seen a video claiming that banking regulators quietly made gold money again this year, unlocking $430 billion in new demand overnight, I want to stop you before you make any decision based on that, because I checked it against the actual regulator, and it's not true. But here's the thing. There is a real regulatory story happening with gold right now. It's genuinely significant. And understanding what's actually true versus what's viral, misinformation is exactly the kind of thing that should shape how you think about buying or selling, whether you're new to this or you've held metal for years. Quick disclaimer, I'm not a financial advisor. This isn't a recommendation to buy or sell anything, and gold and silver have both shown real volatility this year. If separating fact from hype on this is useful to you, subscribe. And tell me in the comments, had you already seen the $430 billion claim before this video? I want to know how far this specific piece of misinformation has actually spread. Let's start with what's actually true, because some of it is genuinely old news dressed up as breaking news. Physical gold has been treated as a Tier 1 capital asset with a 0% risk weight under Basel banking rules since Basel I back in 1988. That's not a 2026 development that's decades old. So when a video tells you gold was just elevated to Tier 1 capital status this year, that part is simply inaccurate.
Gold doesn't scam anyone. People do. Fake urgency, coins with fancy names and inflated prices, fees buried so deep you won't find them till it's too late. That's not conspiracy talk, that's the actual playbook, and it's been running on people for decades. I wrote a book to break that playbook wide open, The Precious Metals Trap. Not a sales pitch, not another buy gold now video, just the real tactics, the real red flags, and the exact questions that expose a bad deal in seconds. Whether you're just starting out or protecting decades of savings, this is the one read that puts you ahead of the pitch, not behind it. Comments, description, both. Now, back to the topic.
Gold already had that status long before any of the recent viral claims started circulating. Here's what's actually new, and it's a more specific, more technical story than gold is money again, but it's real. Basel III includes a liquidity rule called the Net Stable Funding Ratio, or NSFR, which requires banks to hold stable long-term funding behind certain assets on their balance sheet. Under this rule, unallocated gold, meaning a claim on gold that isn't backed by a specific segregated bar sitting in a vault with your name on it, was assigned an 85% required stable funding factor. In plain terms, for every $100 million of unallocated gold a bank holds, it now needs $85 million in stable funding backing it. A real and meaningful cost that didn't exist in the same way before. Compare that to level 1 high-quality liquid assets like government bonds, which need only 0 to 5%. That single number has quietly reshaped how bullion banks operate. Multiple banks have encouraged or required clients to convert unallocated gold positions into allocated ones, actual specific bars with your name attached, because unallocated positions became meaningfully more expensive to hold under this rule. That's a genuinely real structural shift, and it's part of why the physical gold market has behaved differently than the paper gold market in recent years. Now, here's the part where I have to correct the more dramatic version of this story directly. Gold has not been reclassified as a high-quality liquid asset, or HQLA, under Basel III's separate liquidity coverage ratio. The London Bullion Market Association and the World Gold Council have both been actively lobbying for exactly that reclassification for years, which tells you plainly that it hasn't happened yet, because you don't lobby for something that's already been granted. The LBMA has published a direct public correction addressing viral claims that gold became Tier 1 HQLA as of a specific 2025 date, stating clearly that this information is not correct and that people online are confusing two entirely different regulatory concepts: capital rules from 1988 and liquidity rules from Basel III. Even financial outlets that initially reported the HQLA reclassification as fact had to publish corrections walking it back. So where does the $430 billion figure actually come from? I looked for a credible primary source, a Basel Committee document, a central bank report, a named analyst study, and I couldn't find one. It appears in videos and articles that also repeat the incorrect HQLA reclassification claim, which makes me treat the number itself with real skepticism, rather than repeat it as verified fact. I'd rather tell you honestly that I couldn't confirm it than present a number I can't stand behind. Here's why all of this actually matters for you practically, beyond just getting the regulatory details right. If you're deciding whether to buy or sell gold or silver based on a story about a sudden official reclassification, unlocking hundreds of billions in mechanical new demand, that specific trigger doesn't exist the way it's being described. But if you understand the real, slower story, the NSFR's genuine cost penalty on unallocated gold, the ongoing multi-year push for HQLA status that hasn't succeeded yet, and the fact that central banks have been buying physical gold at a genuinely historic pace for unrelated reasons of their own, you're making a decision based on what's actually happening rather than a number that appears to have no traceable source. And the real structural story is still a substantial one on its own merits without needing an exaggerated hook. Central banks have bought gold at a pace far above historical norms for several consecutive years running, for reasons tied to currency diversification and geopolitical risk that have nothing to do with Basel liquidity rules. That's real, sourced, and ongoing. It just doesn't need a fabricated $430 billion number attached to it to be worth knowing about. Now, the honest, near-term picture, separate from the regulatory story entirely. Gold and silver both remain genuinely volatile assets that can move sharply in both directions over weeks, not just years. Interest rate expectations, real yields, and the US dollar drive far more of the day-to-day price action than any structural regulatory story does. If you're buying or selling based on a belief that a single rule change guarantees a certain outcome by a certain date, that's not a position any legitimate regulatory document actually supports. So here's what I'd actually watch, concretely, if you want to track the real version of this story rather than the exaggerated one. First, whether the LBMA and World Gold Council's push for HQLA status actually succeeds at the Basel Committee level. That would be the genuine reclassification the viral videos are jumping the gun on. Second, whether more bullion banks continue converting client positions from unallocated to allocated gold, which is the real already happening trend. And third, treat any specific dollar figure you see attached to a regulatory story like that $430 billion number with the same scrutiny I just gave it. Ask where it actually comes from before you repeat it or act on it. I'm not telling you gold or silver are good or bad buys right now. That depends entirely on your own situation, and genuinely isn't something a video can responsibly tell you. What I am telling you is that the specific viral claim driving a lot of urgency around this topic right now doesn't hold up against the regulator's own correction, and making a decision based on an inaccurate trigger is worse than making no decision at all. Tell me in the comments, does knowing the real, more technical version of this story change how you think about it? Or does the structural gold buying trend matter to you, regardless of which regulatory claim turns out to be accurate? I read these, and if the LBMA's HQLA push actually succeeds, that would be genuine news worth a follow-up. If this helped you tell the difference between a real regulatory story and a viral exaggeration, subscribe. That distinction is worth more than any single number.